All right, and good afternoon. Today is August the 26th, 2017. We are looking at our daily recap from August the 25th, 2017 here at Sell That Option. All right, so what did we do on Friday? We ended up filling 4 orders and we canceled 4. However, 3 of the 4 canceled orders ended up executing. So let's go ahead and take a look at that. We're not going to spend too much time on the stocks that we traded, since we do primarily sell options. These are just a couple of really good opportunities that I did want to take advantage of. Okay, so the ones that we want to note is we did get into a credit spread for 34 cents on Ford, $1 wide, so we took a third of the width of the strikes, which is generally where we want to be. And then we also sold a very far out of the money naked call, for $2.01 for the furthest out weekly expiration, which is a trade that we do every week. Okay, let's take a look at why we got into Ford. Okay, here we are in Ford. I wanted to go ahead and get into Ford here for a couple of reasons. One, I think that our down move is probably over. I think that over the course of the next month that we are likely going to reverse what we're seeing here. Ford tends to move either sideways, or if we do see a downward move, it has been rebounding up a little bit, and so I definitely think that we're going to be okay here. We did get in a bullish call credit spread, right? So what that means, a bullish put credit spread, excuse me. So what it means is I sold the 11 and I bought the 10 for 34 cents. Okay, my break even is $10.66, and so I have room for the security to move down. But as you can see, we saw a pretty decent move down from this day right here, and we've seen all the way down to 1047, and we're on the rebound. So I definitely think that we're going to be okay here, but this is why I decided to get into it. I'm looking for us to reclaim that 11 spot, and so hopefully we will get that 11 spot reclaimed. Okay, let's take a look and see what that looks like in our Analyze tab. Okay, here we are in our Analyze tab. As you can see right now, we have a 51.45% of profit here. Our break even is $10.66, which is where that price slice is. And you can see that our little indicator right here is showing where our current break even point is. We did go pretty far out in order to collect this credit, so we are going to give it some room to move here, and we're going to let time decay do its thing. As you can see, we do need the security to continue to move up just a little bit in order for us to get our max profit, but we are protected here with a max loss well below our 1% allocation, and so if we want to leg in, we might. So something that I might look at doing here is if we see a retracement down to $10.60 or $10.50, I might look to add another 10-11 spread in order to get a little bit more credit and continue to play. This is Ford, and so this is a security that we know is very well established, and so we're just kind of playing the odds for it to move back up. Okay, so this is our position. Let's go ahead and take a look at our VIX position. All right, let's take a look at this VIX trade. I sold one out of the money call at 61. Okay, so I sold that for $2.01, and so really here we are playing to kind of see what happens with volatility. As you can see, we have a probability of being out of the money at 82.89%. So we've got an 82.89% probability of this trade being successful and us getting to collect all of our premium. We'll look to manage it early if we need to, but this is something that I've been beginning to try out, are these super far out of the money calls with volatility, right? One of the things that I like about VIX a little bit more than I like about UVXY is that if volatility really gets going, UVXY exponentially increases, right? So in much the same way that we see that 2 by hurt UVXY, the increased momentum also helps volatility in UVXY in periods of a significant down move, the multi-day down move in the market, which we really haven't seen a number of 1.5%, 2%, 3% back-to-back days or anything like that, which would signal a correction. Granted, you have the IWM, which has seen a pretty significant almost a 10% move in the last month or so, but we're not necessarily seeing that in any of the other major indices. So we do have this very far out of the money, 26 delta, 82.89% probability out of the money. And so we did sell that, and it is set for October the 6th, which, as you can see, is our latest weekly, okay? Now, one thing that we did take off, or let to expiration go, a credit spread, a VXX credit spread for this past Friday's expiration, and so we did bank that entire credit that we brought in on that trade. Okay, as you can see, we do have a couple other positions in weeklies right here in September and September 22nd and September 29th. So we'll just look to continue to have those continue to decay and hopefully either manage them early or take them all the way to expiration. Okay, these were our trades for Friday, August the 25th, 2017. If you have any questions about why we put on what we put on, please feel free to reach out to me at ryan@sellthatoption.com. Until then, I look forward to continuing this journey. And as always, stay humble, stay hungry, and here's to our success.